Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for January 22nd, 2016. I am Frank Ochoa, aka PivotBoss, with your analysis for today's session. We have the ES in a daily time frame here. After we formed this major tail event 2 sessions ago, I mentioned that any pullback into the CLVN at 1846 should be an area to be defended for a shot at seeing a return to 1921 quarter, and 1939, which is the center of the potential impulse move that we've seen here. Once price does hit, or should it hit, the 50% pullback zone, that then becomes our key range where we will then extend out key levels within and outside the range so that we can play off of this range. Once that does happen, that range is likely to remain in play for many, many months, if not the first half of the year. You can see this major range that came out in August here. This one formed in August, and since then we've been playing based off of that range. So that's an August range, and we've been seeing bounces and reversals off that key level the entire time. So these major ranges, when they form, can maintain significance into the future for many, many months. So right now we've been right on the money in terms of buying that pullback the day after the tail event. We've seen a higher high and a higher low day over day so far. This is 3 sessions in a row. And while I don't expect us to just run off and tag 1921s right away, I do believe that first you have to be able to see the market establish acceptance above the key zone where we're at. We have the previous session's high at 82s, the previous week's close at 75s, and then you have 1879 as the key level here, 100% level from this key range. So there's a confluence of key levels here, and right now price is holding above that zone, holding above 2-day highs. You want to see price close above that zone and ideally close at or beyond where we're at now. So when price comes back into those previous 2-day highs for a retest, you have bulls that are ready to defend for that next leg up. So we're going to stick with that story right now as it continues to play out. Any failure to hold or close beyond this level would indicate a likely auction lower for another shot at that CLVN. So far so good on our initial analysis. If we look at the intraday time frame, you can see how price is chopping higher right now with higher lows. We also have higher highs, but we have this uptrending channel. So short term, you can see overnight VPOC quite high, 1887s. It tells you there's a confluence of volume there, a lot of volume there off that edge, and we're at the top of this channel. So right now, all of this volume, it could be too long in the short term, and if we get too long and we can't hold above 1885 or 1880, you're likely going to see price auction back toward 1865, which is 5-day VPOC, and value has been bid so far in this time frame, so expect bulls to defend for another round higher. All right, let's take a look now at crude oil. Crude oil has seen a 2-day bounce here that's been pretty decent. I wasn't that impressed with the bounce we saw the previous session, so I haven't been talking about any type of major rally event. What I did say was we've been in a downtrending market. We've seen 1 or 2-day bounces that have led to continuations lower. Right now, price is bouncing into a stacked and sloped pivot-based EMAs. These stacked and sloped EMAs here offer a trigger zone right between the first 2 EMAs. So right now, crude oil is in that trigger zone. If price can't close beyond the 3089s here, we could be looking at a potential opportunity to see another round of weakness to new lows. So basically, when you're in a downtrending market, you want to sell the pullbacks. This is a downtrending market. This is a pullback. This is an opportunity for bears to defend for another round of weakness. If bulls can continue to hold, though, above this 3014s, then there's a shot to see a retracement back toward the previous high at 3411. And eventually, whenever that lowest low is found, I don't know if this is it, we could see a move back to value, 3781. But we have to find clear rejection of these lows. And right now, we're seeing a decent bounce, but any bounce in a downtrending market is fodder for bears to defend and return to new lows. Let's take a look at the intraday time frame briefly for crude oil. Right now you can see prices holding above the previous week's close of 30.62. That's going to be the key level to watch right there. Bulls are holding that zone. Any returns into it, in addition to this little LVN here, are opportunities to defend. Failure to hold that level opens up a move back to 29.55. All right, let's take a look now at gold in a higher time frame. We've been talking about gold here and how it's had this rounded off bottom. Price pulled back and saw it bounce back up, and now we're seeing an inside day formation. We actually have a 2-day inside day formation, but we're heading into RTH now. This pattern right here bodes well for further expansion to the upside. If prices can continue to keep composite VPOC bid at 1072s, again, we're forecasting the next move to go into 2380 and 30. So the next move should get us right into the zone. And if that happens, I think the likelihood of following all the way back to 1169.70 is very good over the upcoming month of trading. All right, let's take a look now at the NQ. The NQ, very similar to the ES here, had a major tail event in the session 2 sessions ago. Very significant bottoming formation here off that CLVN 4072. I mentioned the next day, if we pull back into that zone, that's an area for bulls to defend for a shot at seeing a move back toward the 50% retracement point, which is 43.40. That would then establish the key range here for this impulse move. And once we have that key range, hitting that 50% part, that solidifies or cements this key range so that we can continue to use this range and its key levels and extensions moving forward. So right now, the idea is for bulls to continue to defend any pullback into 40.72 for continuation. Short term, the market is just trying to hold above 41.74 and above the previous high. So closing above the previous high would be a big score. But right now, what we do see is higher high day over day, higher lows day over day. That's a short-term uptrend that implies further strength ahead. In the very, very near term, the NQ right now is holding above the previous session's high of 41.92. We have an upward trending channel right now, very similar to the ES, and we're at the top of that range. Overnight VPOC is very high and heavy. That tells you the market could be too long short term. So what I would be looking for right now is any rejection of prices above 41.92. Failure to hold that level, take it back to 41.43. That's 5-day VPOC. Once price gets to that zone, expect the market to defend value for a return to the top of the channel. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck, trade well, and happy Friday.